All right, if you're a leader at a mid-sized software company, you can probably feel it, right? That sense that the ground is shifting right under your feet. We are in the middle of a massive, industry-defining moment, and it's all being driven by AI. And make no mistake, this isn't just another tech trend. It's a fundamental rewiring of the entire landscape. So in this explainer, we're going to break down exactly how you can navigate it.
Nothing captures the sheer speed of this change quite like this quote from PwC. For the last decade, software eats the world was the mantra, it was gospel, and then bam, seemingly overnight, that whole idea gets turned on its head. This isn't a slow motion evolution, it's an absolute revolution, and honestly, it's catching a lot of folks flat-footed. Let's just be real for a second. The threat here is, well, it's existential. You're getting squeezed from both sides, by the big tech behemoths and these super nimble AI-native startups. But look, this isn't about doom and gloom. Think of this as your playbook, your strategic guide to getting through this new reality. And here's how we're going to tackle it. We've got 5 clear stages. First, we'll talk about the end of the era we all knew. Then, we're going to meet the so-called SaaS killer and really understand why it's so disruptive. After that, we'll get into the new business model you need to compete. From there, it's all about defense, building an AI-proof moat. And finally, we'll map out your most critical next moves. So let's dive into Section 1, the end of an era. This is all about something analysts are calling the big squeeze, and it perfectly describes the, let's just say, precarious position that so many software companies are in right now. So what exactly is the big squeeze? Well, it's like fighting a war on 2 fronts. On one side, you've got these hyper-agile AI-native startups that can basically copy your features for a tiny fraction of the cost. And on the other side, you've got giants like Microsoft and Oracle throwing billions into this AI arms race. And this is all happening while growth is slowing down, and investors are suddenly way more interested in profitability than just growth at all costs. And you can really see just how tangible this slowdown is. I mean, look at this chart. In 2023, nearly 60% of software companies were considered high growth. By 2025, that number is forecast to drop to just 27%. That's more than half of the high-growth club just disappearing in only 2 years. The party is definitely winding down. And here's another really critical warning sign. This is net dollar retention. For years, it's been the gold standard metric for SaaS health. It basically tells you how much your existing customers are spending more with you over time. Dropping from a really healthy 120% down to 108%, that is a major red flag. It means customers just aren't expanding their contracts like they used to, and churn is becoming a real problem. Okay, so where's all this pressure coming from? That brings us to Section 2, the rise of the SaaS killer. And this isn't just some abstract threat. There's a reason they're calling the market reaction the SaaSpocalypse. The financial fallout has been absolutely devastating. Just look at this number. $285 billion. That's how much market value vanished in a single day, a day the market now calls Black Tuesday. This was not a minor correction. It was pure, unadulterated panic, all because the market woke up and realized that AI agents were no longer just science fiction. And it wasn't just the small guys getting hammered either. This was a complete sector-wide bloodbath. I mean, look at these names. LegalZoom down 20%. Thomson Reuters down 17%. And even the giants, Salesforce and Adobe, both took a 7% hit. The market sent a crystal clear signal. If your business model depends on a human being in the loop, you are in serious trouble. So this is the really crucial part, understanding the SaaS killer thesis. This is a deep structural change. We're witnessing the end of software as a passive thing you use and the beginning of software as an active thing that works for you. We're moving from passive tools to active autonomous agents, basically digital employees. And if you want to see exactly where the money is going, where investors are placing their bets, just look at the legal tech space. It's a perfect example. CS Disco, a traditional SaaS company, is trading at a brutal 1 times its annual revenue. Meanwhile, Harvey, an AI native company in the same industry, is valued at an incredible 110 times its revenue. The message from the market could not be any louder. Which brings us to the big pivot. Section 3, the new business model. If the old way is broken, what comes next? Well, it's all about a fundamental shift, from selling tools to selling outcomes. I absolutely love this analogy. Old school SaaS sold the shovel.
New agentic AI sells the whole. Just think about that for a minute. You're no longer just handing someone a tool that requires a human to do all the work and pricing it per user. Now you are providing the completed job itself, an autonomous outcome, and pricing it based on the incredible value you just delivered.
And let's be super clear about the technology we're talking about here. This is not another co-pilot that just helps a human work a little faster. No, this is an autopilot. It's an agent that can understand a complex goal, like, say, close the monthly books, and then figure out and execute all the necessary steps across different systems, all without a human touching it. And this quote from PwC just cuts right to the chase, doesn't it? It gets to the heart of the problem for the traditional SaaS model. The entire per-seat pricing strategy is built on this idea that as a company hires more people, its software bill goes up. Well, autonomous agents don't just challenge that idea, they flip it completely upside down. The more powerful your AI gets, the fewer seats your customer actually needs. Okay, so how do you fight back? How do you defend your business against this? That takes us to Section 4, building an AI-proof moat. If your old castle walls are crumbling, you got to build new ones. Let's get into the strategic plan. So there are 3 core pillars to building a defensible moat in this new AI era. Let's break them down. First, domain depth. Look, anyone can write code these days, but they can't just download your years of specific industry expertise and customer trust. That is your secret weapon. Second, proprietary context. This is more than just data. This is about the unique, validated playbooks that make your AI smarter in a way that nobody else can copy. And third, workflow gravity. This one is huge. If you own the mission-critical system of record for a major financial or regulatory outcome, new AI agents have to build on top of you. They can't just replace you. Defending your turf also means you have to start measuring success differently. First, you need to shift your focus from net retention to gross retention. GRR tells you how many customers you're actually keeping, period, without any upsells hiding a potential contraction in seats. Second, and this takes courage, you have to be willing to cannibalize your own seats. You need to move to outcome-based pricing yourself before a startup does it for you. And third, use AI to massively speed up your own product development. In this world, speed is everything. And all of this leads us to our final section, your next move. Because I promise you, in all of this chaos and disruption, there is a massive, massive opportunity for companies that are willing and able to adapt. As one analyst so perfectly put it, right now the market is just panicking and there are babies being thrown out with the bathwater. The big sell-off is hitting everyone. And what that means is, for companies that have real domain expertise and a credible AI strategy, this chaos is creating a once-in-a-generation opportunity to get ahead. Ultimately, getting through this requires a profound change in your mindset. And this quote, this says it all. You are no longer in the business of deploying software. You are now in the business of deploying intelligence. Every single decision you make, from product to pricing to hiring, has to be seen through that new lens. So I'm going to leave you with this one question to think about. If the cost of writing code, of building basic features, is dropping to virtually zero, what is your company's real, durable value? The answer to that question will be what determines whether you just survive the SaaS apocalypse or whether you actually thrive in this new era of autonomous intelligence.